going to talk a little bit today about how to create a competitive advantage with your bank storefront. But I think you'll see that regardless of whether it's a banking storefront, whatever the application, I think there'll be some things to take away, even if you're not all that familiar with banking or financial services per se. So the first question is probably, what is your storefront? And it's a term that's used throughout the banking industry. I think to make it more complex than it really needs to be, it really is your marketing or informational portal that's used by the bank. What I've got here is just kind of a very simplified functional view of your typical bank. You see the storefront sits kind of above all of the other pieces, whether they be your lending system, your deposit system, securities, credit cards, what have you. That you could have multiple core engines in that space, whatever the case may be. And then beyond that, some additional core processing, business intelligence for reporting, CRM systems, all of your back office operational and risk stuff. And a lot of that is wrapped in customer service. So what you end up with on your storefront is generally you want to bring the product rates forward. Generally there's a login or some jump off to a login for transactional capabilities, marketing information, contact email, et cetera, et cetera. So that's kind of what we mean by storefront, is the aggregation of bits and pieces of all of the different components of the bank brought forward in an informational context. So wanted to go over some of the pressures that banks are facing today. And really you'll see these are kind of applicable to most firms. For banks, especially in the U.S., we had a very large housing market collapse, and also worldwide, resulting in a fairly decent economic downturn. I don't like the word recession, but it is what it is. Certainly, the business environment, the economic environment has gotten more complex. There's more regulation. On the top of that, products are commoditized, right? If you're going to buy if you have a checking account at one bank, largely it's the same as a checking account at another bank. So it's hard to differentiate from a product set. Certainly, tighter expense and cost controls. That's kind of the norm, regardless of industry. And customers, they want better service. They want basically to feel like they're your only customer in a lot of respects. Some additional trends. We're certainly seeing a lot of bank closures. 89 in the U.S. so far in 2009. There were 5 last week alone. The dollar total of those failures is certainly in the hundreds of billions of dollars in terms of deposits. A lot of that gets shared. Certainly with the increased M&A activity, stronger firms are purchasing the assets of those firms that collapse, or looking to buy other firms other banks to speed their growth. It's predicted that the number of banks over the next several years is going to actually be sliced in half. So if you look 15 years ago, there were close to 20,000 banks in the U.S. That number is closer to 8,000 to 10,000 now, and they're expecting that should get down to the 3,000 to 4,000 range over the next few years. So going to be a lot of consolidation. This, I think, is true regardless of enterprise. IT personnel are stretched to the max. I think everybody's stretched to the max, but certainly IT personnel, especially in banks, we're starting to see spending is actually on the decline for the first time ever. And also a lot of small to mid-sized banks, they have a small staff. And a lot of times they're fighting whatever the latest maintenance challenge is or infrastructure challenge. They don't always have time for the new projects that have the potential to bring more money into the bank. And customers, because products are commoditized, they move around a lot. On average, 15% to 20% of a bank's customers will have left that bank. So for every 100 customers they bring in, 15 to 20 of them will be gone at the end of the year. They need to then to go and get more. But it's not all bad news. Web banking is on the rise, mobile banking. I just saw earlier that Nokia, the cell phone provider, they had invested in NovoPay. Now they're launching their Nokia payment service. So next generation Nokia phones will come embedded with a payment service where just via your cell phone, anybody in your contact list, you can send them money via your phone. So certainly that's probably very leading edge, but those are the types of transactions we're going to see in this industry going forward. The fact that customers can switch banks can be viewed as a positive because you can attract customers from another bank, right? So a mobile customer or a transient customer is not necessarily bad. The important thing is you want to keep them, obviously. Customers, they're looking for safe havens. They want to know, with the number of financial firms that have failed in the past year, they want to make sure that when they do put their money somewhere, that it's safe. I watched a piece on the news. The FDIC, which is an insurance company for banks in the U.S., went in, took over a bank, and they didn't need as many personnel to run the bank. They needed 15 to 20 people to explain to customers that their money was safe because customers wanted to come in and take their money out. So customers there is a bit of a panic if they find out that there's some sort of trouble with their bank. So let's say you're doing well, you've got the requisite product set, you've got the rates are competitive, you're doing everything you need to do. The real piece here is customer engagement is really going to be the key. How do you want to know how you're going to get these customers, how you're going to attract them, and more importantly, how you're going to retain them. Gallup did a study that engaged customers, they're less likely to leave. What they found was about almost 40% of customers, if they consider themselves to be engaged with your bank or with their bank, they're less likely to leave for a competing offer. Extremely satisfied website users are 7 times less likely to leave. For mobile banking, that's 15 times less likely to leave. The Tower Group says if you can minimize your turnover, you're going to grow, a certain percentage faster. They say 30%. I'm not sure how they came up with the number, but I think the logic is sound. If you have less customers leaving and you're doing the right things to attract new customers, you're going to grow. I thought this last one was a bit of a telling statistic. For large banks, a 5% increase in the customers who say they are only moderately engaged to fully engaged with their bank represents about $1 billion in deposits, whether that be through increased deposits from their customer base or word of mouth attracting new customers. So it's pretty significant. A lot of people will look at customer engagement and say this is a very nice marketing concept, but hard to translate. Here's one thing that does translate it into real dollars and cents. So what are some of the best practices here? Excellent customer service. Again, we said earlier, customers want better customer service. They want it personalized. More importantly, they want it to, we have a saying called once and done. They want to make one phone call, have whatever their issue is resolved, and go on with their lives, right? None of us like to be stuck on the phone or pouring through websites to try and get the information that we need. We want it now. We've got better things to do. They want to be able to access the bank in any which manner that they choose. So whether that be on their mobile device, whether that be chatting with a financial professional online, they want to pick up the phone. Maybe they want to walk into a branch and actually see somebody in person. So they want a consistent experience across all of those channels. Simplicity, I think this ties into the once and done concept. They want the information. They want it to be intuitive. I think we all know if it takes more than 2 minutes to search for something, I've given up and I'm on to either the next site or the next thing. And they want trust and confidence. They want to know that their money is safe. They want to know that it's secure, and they want to feel like they're doing business with somebody who's a trusted partner. So this we posted this slide in our other presentation earlier. But we really feel that customer engagement is the glue that keeps this life cycle together. From attracting new customers to servicing them to retaining the ones that you've got. A brief segue or transition here. The online evolution, primarily, if you look back 6 or 7 years ago, banks primarily just put very basic information up on their websites. Maybe it's where to find the local branch, maybe where to find an ATM machine to get money, a brief product list, maybe a couple FAQs, but not a whole lot of content. What we see is that expands. They go with more informational content over time. The rates, as opposed to saying call us for the latest rate, they can embed the rates real time. Customers do like calculators. They want to be able to map out their investments, see some of the different features of a product in action, so to speak. And of course, contact forms, as opposed to here's our email address, keeping the customer on the site when they do that. From there, the progression is into simple transactional sites. So maybe it's just your balance, maybe the ability to affect some payments. For products that require credit approval, the ability to at least initiate that application online. And then it moves into the enhanced transactional, being able to open all of your accounts online, fund them potentially via transfer from another bank, get real-time decisioning on credit products. And the last piece, which is kind of the financial holy grail, is the virtual financial center, right? Everything that you could do in a branch, talking to an individual in person, you can do online. And expanding this out to personalized financial management and other tools, an expanded calculator set, et cetera. Telling statistic for us in the US, only 30% of banks have gotten to the point of the enhanced transactional where they have online origination capabilities. So still a tremendous way to go for financial firms out there to make it to these next steps that really will boost customer engagement. Another slide that we posted earlier, but kind of our view and based on certainly on our experience in the marketplace of what a multi-channel bank can look like. And the key piece here for us is we're taking the content management pieces of Magnolia and embedding them across our product set. Not only for ease of use, but for consistency in the information that is presented to a customer or to someone servicing the customer. A good example there in our Customer Edge product is we can embed in essence, a website renderer where we can see the customer's view of the website. So, right, we already have the information about the customer. Let's say they call and they say, I'm having an issue with X, Y, and Z online. We can pull up a viewer that essentially makes us look like we're logged in as the customer, right? And you can get to the point with some of the portlet features that you can do this for specific browser versions, right? So you can have different versions per browser and really see what the customer sees, and that's going to win over a customer. If they know that you are, can help troubleshoot their problem real time like that, that's one of the keys to customer engagement. Back to the storefront. For especially in the U.S., for most banks, this is the first, potentially the only face that the customer sees. There's a lot of activity that they may look for your bank online, never come see you in person. It's the primary source for product information, right? They're going to go there first. Interesting, personalization here begins with customization. Certainly, the customer could set preferences. When I log into eBay, I get a specific page view, right? You can, banks and financial services can start to do the same thing. Even before the customer logs in, you generally can identify that this customer's been here before. As with everything, content should be relevant. It should be current. And the interactive tools really should be helpful. Gallup, again in that same survey, they saw a very positive correlation in the number of features of a website that a customer uses, whether they be chat, calculators, email. The more features they use online, the more likely they are to stay with the bank. So, just kind of a different view of our overall deployment, where we're sharing the same repository across multiple products. We're at the Magnolia conference. I don't think I have to belabor the success factors of content management to you guys. You guys know all these. One of the important things we see is just that last bullet, the ability to seize opportunity. So it may not be only about getting new products to market, but that speed to market may allow you to go after certain business that you couldn't do otherwise. I have a brief case study. Prior to being with Energy Edge, I actually ran the technology portfolio of one of the top 100 banks in the US. And we were embarking on a content management system implementation. So the numbers are what they are. The IT hourly rate here, that was the cost of our IT professionals. The business rate is a little bit lower, just generally because the skill set is a little bit different. But what we did is we tracked all of our changes and we boiled them down to average change units, if you will. So this example here is a content change. So it's not new development, it's specifically a content change. And on for an average content change, it cost the bank a little over $2,000. The piece that's not here is it also took at least 6 weeks because you had to go through your normal development cycle in order to implement that. Post CMS, we get that down to 10% of that number. Not surprising, I think, for most people here. The important thing is we also got the turnaround time down to a couple of days. And those couple of days generally have more to do with approvals and workflow than the actual content publishing. So 29% ROI. So if you don't believe the customer engagement statistics and the marketing speak, the financial types will certainly agree with, this is a compelling reason alone to do this. We also saw some additional benefits. Again, the reduction in cycle time. We certainly could share content across platforms. So we could share content from our storefront to our transactional site. We did it through custom web services that we built, but certainly the concept is the same. The business users were certainly more satisfied. It was easier for them to make change. It was an easy-to-use system. I spoke on the last slide about seizing opportunity. Because we implemented a CMS, we were actually able to go forth, implement a new product, and specifically grab $50 million in deposits that we would have missed the opportunity. There was a very short window for enhanced lending rates that we were able to take some of that money, put it into a new product to attract new business, and we were able to actually go ahead and capture that. Whereas before, 6 weeks out, we would have missed the lending window and not been able to offer such a competitive rate. Additionally, $100,000 a year in savings in the IT costs. So that's either money that comes out of the bottom line or can be redeployed onto other projects for the enterprise. And also reduced operating expenses by reducing the amount of call volume. Information was easier to find. Customers didn't have to call or email to get simple questions answered or learn about certain product features. So, one of our latest implementations, and this one is actually powered by Magnolia, ally.ca. And this is an actual screenshot taken a day or so ago of their storefront page. And I just wanted to walk through some of the features that we embedded in here, because it certainly looks pretty flat HTML in this rendition, but the menus obviously are fully customizable. I mean, that's pretty standard. Multi-language support, certainly in Canada, they're bilingual, so people have a preference. We have the ability to share up the same templates in 2 different languages. Certainly could make it more. Site search, it's one of those things that, again, we're impatient as consumers. If I don't see it in front of me, I want to search for it, I want to find it, and move forward. Here's an interesting customer service feature. I don't know if you can read that. It says current call wait time 0 minutes. And what that means is the call center is currently able to answer the phone near immediately, right? So if you're a customer and you see a phone number on a website, the first thing you're thinking is, I'm going to call and I'm going to sit on hold for 10 minutes. Well, we brought this forward to entice people to call, because now they know that they're not going to sit on hold for 10 minutes. Their call is going to be answered fairly quickly. Or if that number is high for whatever reason, I'll come back. Yeah. Sure.
What did you interface there?
It's a service API to their call management system.
HTTP over XML call to just a plain Apache server that has a flat file that gets updated by the call center folks who manage the phone system.
What's the call center?
Just customer service, so the people that are answering the telephone.
Yeah, if they have a problem, you call them back.
Right.
No, it's clear what it is, but what kind of a product do they use?
For their customer service system? I don't know what they're using on the back end. Yeah. But that's a neat feature that we wouldn't have been able to embed before. This is actually a Flash banner, fully customizable, fully swappable at a moment's notice. So if you've got a new ad campaign, then you can, obviously at a moment's notice. And the last piece here, these are real-time rates displayed to the customer. So if for whatever reason Monday morning the rates change, automatically reflected here on the website, and that's another web service call to the back end to get information. So our experience with Magnolia, obviously, I think it's the same. We're all here. We're users. Support's been fantastic. The features are certainly rich. The ability to integrate pretty much anything at this point has been working well for us. So with that, I'll if there's any more questions. Great. Thanks, guys. Sure.
It was about the 5 steps of the banking. You have to enhance banking. Can you get
Sure.
You stated 30% of the customers have online account originating. Where's the biggest part of the bank? So is it in simple transaction or in expanded?
Most of them are in simple transactional, and the reason for that, the back-end providers, the deposit systems, the lending systems, there's only a handful of providers of those systems. So most banks are using one of those handful of systems, and those service providers offer some web interaction with their application, and it tends to be that simple transactional. What's my balance? Can I, a lot of them don't even have money transfer in and out because they're trying to lock the customer down into not moving their money. So what ends up happening is the customer then goes to their other bank and transfers the money that way. So it doesn't stop, but that's where most of them are, is that simple transactional. Some of your smaller startups are in the expanded informational, but they're doing it generally through brute force. So they're going in daily and updating their rates as opposed to there's no real-time integration to their systems.
So what do you think will be the development in the coming years? That everybody's looking to its virtual financial center, or is that in 2020 or something like that?
I think certainly the big banks are moving very quickly to the virtual financial center. They've got the financial wherewithal to do that. What we're seeing is a lot of interest in the mid-tier to get at least to the enhanced transactional. And a lot of it comes down to cost. Their appetite right now may not be as much. But specifically for us, there's a tremendous opportunity to create a better mousetrap that banks can use to attract and retain customers, because those handful of service providers, their core are those processing systems. Their core is not website development or website design. So they're going to offer a baseline set of functions, that they charge the customer for. If we can come in at a competitive rate, which we think that we can, we have the opportunity to replace most of those online features for those customers. Sure. A little long-winded answer, but hopefully it helped.
That trade stuff, yeah.
Yep.
Is that using your kind of OEM version of Magnolia, or is that straight?
That was pre that. That was actually one of my own projects, but I thought it was at least a good representation of some of the cost savings that are possible. And it was a moderate cost for the implementation, somewhere around $200,000 all in. And it was actually a completely homegrown CMS. All right. Well, thanks, guys. Appreciate it. Yeah.